Hello, I'm Jay Bowman with FMI, and thank you for your interest in this, our first quarter forecast for 2021. As the seasons change, the saying, "Hope springs eternal," really do come to mind, particularly as we think about where the economy is today compared to where it was just 12 months ago. In fact, there's a lot of reasons to be very optimistic about where things may be headed, not only from a general economic perspective, but for our industry as well. And particularly as we think about the pandemic and where we are in terms of vaccinations and infections, we're at the point now where roughly 25% of the population has been vaccinated. And for those over 65 years old, over 2/3 have been vaccinated. And as the number of infections continue to decline, we're seeing that positive momentum in the economy overall. In fact, when you look at sort of three things, GDP, unemployment, and retail sales, all three of these point to a positive outlook for 2021. We ended 2020 with GDP down about 3.5%, which is pretty amazing given where we were in the second quarter. For 2021, we're actually predicting the year to end up north of 6% in terms of GDP growth. Likewise, unemployment ended the year over 6% in 2020, and looks to be on track to be close to 5% by the end of 2021. And retail sales, which is probably one of the best indicators of construction activity, are up 10%. So by all accounts, the economy looks pretty good, which has positive implications for what the construction outlook would be. So what does this mean for construction? Well, if we start with the non-residential construction index, which is just a sentiment measurement of how people feel about the economy and the industry overall, this past quarter, it actually registered a 54.4. Now remember that anything over 50 suggests that the industry is in expansion mode. Anything below 50 is in contraction. That's up from 47.1 in the prior quarter. So the question is, where did we end up for the year in 2020? We actually posted a 5% increase in overall construction spending, which is again pretty amazing given everything that we went through. But as you've probably heard me talk about before, the majority of work in any given year represents backlog that was actually awarded either the year before or even prior to that. As we kind of look forward, we're projecting that 2021 will be down about 1% overall, but that's much better than where we were before, again, given some of the reasons to be optimistic in the marketplace. Now, residential sees more of a decline overall over the next couple of years, while things in the non-residential building actually begin to moderate. And then on the public sector side, particularly heavy civil construction, continues to work at a relatively good pace. So although overall construction spending may only be down 1% in 2021, it's important to note that the recovery that we'll see is going to be highly uneven, whether that's by segment, as shown here, or even by geography, whether that's state or metropolitan area. And as we look at some of the markets here and those that will probably be lagging in terms of recovery, you see they continue to be those that, even with what we've seen from the lower infections, more vaccinations, still really crowd-dependent types of segments. So whether we're talking about office, amusement and recreation, lodging, those types of segments particularly will probably take a little bit longer to get back to sort of pre-pandemic levels. In addition, it's just the question of, well, what's changed over the last 12 months? How many people actually will return to an office setting? Now, what about those that are in the growth projection for the next 5 years? Multifamily may be the first one to point out because it's somewhat muted compared to where it's been in the past, but that's largely because of the slowdown in the number of mixed-use type of developments, again tied to office, lodging, and some of the commercial activity. But most of those public sectors, whether highway and street, even some of the educational, communication, water, wastewater, those will be continuing to grow and are actually being boosted by some of the stimulus money that's coming out. And as people begin to think about whether it's diversification into new segments or new geographies, or even just where to focus their investments, it's important to remember that if you want above average outcomes, you have to say no to average opportunities. So I recommend that you contact one of our consultants or bankers to talk about the specific issues facing your organization and how you can best position for this recovery that we do expect to start happening, perhaps even by the second half of this year, or at least by 2022. You can download our full report at www.fminet.com. And again, thank you for your interest.